Hi everyone, let's go through all my scenarios, bullish and bearish, preferred and alternative. Starting on the macro with the bullish scenario where I'm looking for a 1, 2, 3, 4 and then a wave 5 to the upside with targets most commonly between 98k and 174k. What's nice in this scenario is that wave 2 bounced perfectly at the golden pocket area over here and eventually moved up for a wave 3 where also wave 4 bounced perfectly on the 0.5 pip taken from the low of 2 to the high of 3. It also made the low exactly on the 0.618 fib time taken from the low of 2 to the high of 3. And we also had a volume spike at the lows, which could signal potential reversal areas, just like it did during the COVID dump over here in wave 2. Very, very high volume for then a move to the upside. So this has some potential. In this scenario, we'd be looking for a little bit of a retracement to then enter a potential long setup, stop loss below the low of wave 4. Very clear invalidation for then a move to the upside. If we look at the bearish scenario on the higher time frame, we have a 1, 2, 3, 4 and then eventually wave 5 followed by a WXY scenario with prices between 9 to 12k still to come. What I don't necessarily like about this scenario, however, is that inside the impulse, this wave 4 is very, very short compared to wave 2 as well as the impulse itself. And that is something to take into account. If we then look at the support resistance area over here of wave X, this is a very important area for wave X because of the support resistance area, weekly order block here as well. We didn't actually yet, we just missed out on this white box honestly, but this is a potential area for entering short with the potential trading setup, stop loss above and then trading it to the downside for then a potential wave Y, where also wave Y would backtest this area over here that we haven't seen since basically after the 2020 bull run. If we then go to the high time frame, I have a very bullish scenario over here. The very bullish scenario is definitely an alternative scenario where the low of the bear market is in, and this was wave 1. This is already wave 2, and we are now on our route to wave 3 to the upside, which basically means that this then can be a 1-2 scenario, or if I show you the lower time frames, this is maybe a 1-2-1-2. The reason that this scenario, however, is a lot less likely for me is that wave 2 over here is really, really short. Wave 2 reached the 0.236 fib time taken from the low to the high of wave 1, which is very rare. I'm not sure if I've ever seen it, but again, you never know what's possible, especially in crypto and Bitcoin. But usually wave 2s take at least 0.382, so 38% of the time of wave 1, which would be Tuesday the 21st of March. So for me it was better if price came down, up again, down, ending somewhere over here at least, if not later, and then move up. That would have been better for this scenario in my opinion. But hey, if this is the scenario, we would be looking for prices to the upside, where the minimum prices we'd be looking for is 43k, as that is the wave 3 extension, but it can extend a lot further, as you can see. If we then go to the bullish scenario, which in my opinion is more likely than the previous bullish scenario, we have the low of the bear market made over here with a WXYXZ in the move to the downside. And we are now looking for this to be the end of a wave 1, followed then by a wave 2 and eventually a wave 3 to the upside. In this scenario, this then is a 1, 2, 3, 4, 5 scenario, where wave 1 very likely is going to end around this support resistance flip as well. And we have a high time frame range value area low that we've been testing now for a little bit as well. So there's quite a little bit of confluence in this area. Potential trading setup is then entering the shorts over here, stop loss safely above, trading it to the downside, where if we look at the fibs for wave 2, the most common fib targets are the 0.5 to the 0.786, with the 382 and the 886 being rare targets. So basically the 0.5 21k to the 786 at the moment being 17.6k. And what is nice is that by far the most common target out of these again is the golden pocket, the 618 and the 66, which has nice confluence with the low over here for potentially a little bit of a liquidity grab. So one could say, okay, we can have the golden pocket area, liquidity grab, entering potential longs in this area, stop loss below wave Z, and then trading it to the upside for a very, very, very big swing trade all the way to the 98 to 174k target. If we then look at the bearish scenario over here, we have a WXY, and currently as it stands now, the bullish and the bearish, so the bullish I've just shown and this bearish scenario are both as likely, at least on this time frame. And the reason is that the short setup over here is exactly the same. The only difference is how long does it continue to the downside. So with this being a wave 1, 2, 3, we expect wave 2 to end somewhere here and then move up. But in this scenario, price would go and continue further to the downside, so the short will be longer. And in this scenario, in a wave X, we then have an ABC, with this being a 1, 2, 3, 4, 5. We are currently in wave 5 ending territory over here, the 1.618 and the 1.236, taken from the high of 3 to the low of 4. And what's nice about this area as well is that we have the high time frame range value area low, which, as you can see, we have hit a couple of days, 2 days in a row, actually yesterday and the day before, which is quite nice for extra confidence in this area. We didn't yet hit at least the 1.618, so still a possibility, you know, but one can also just move to the downside. This level, however, is 29.6k, and also wave X, usually the minimum target for wave X is the 0.382, also sitting at 29.6k. Haven't yet reached that, but we did of course reach a very important support resistance level, which is the high time frame range value area low. Also, this all happened inside the most common wave C target as well. So we already reached the minimum for the most common wave C target for then potential move to the downside, entering the short, stop loss safely above, and there we go. If we then look to the medium time frame and we basically zoom in just a little bit, you can see that over here we have again the very bullish scenario, where this is wave 1, this is wave 2, and we now look for upside. Again, this is an alternative, definitely not preferred at the moment. And that is to do with 3 things over here. First of all, we have the fib time as mentioned, where this wave 2 is very short. It only hit the 0.236 fib time of this wave 1, which in my opinion is just very short. Then we have the volume. Price is moving to the upside, but as you can see, it's actually not doing this impulsively. It's more having a bearish structure where we're starting to go horizontal, if not to the downside at the moment. And volume is also not supporting the move to the upside. If this is going to be such a bullish wave 3 to the upside, we want to see volume also increasing, but instead it is actually going down on average, which is not something you like to see if you're a bull. And lastly, wave 2 over here actually just missed out on hitting the 382 fib over there, which is a minimum target for wave 2 and already rare. The 382 is already a rare target and it didn't hit it. However, if this then is a potential scenario 1-2 in yellow followed by a 1-2 in green and then another 1-2 in blue, man, it's crazy to think at the moment as it stands now, then this is a 1, a 2, and we're looking for more upside. Invalidation is taking this high because we're not allowed then to take this high. And currently we had a bounce on the 382, which is a rare target again for a wave 2. So the most common targets over here are the 0.5 to the 786, which is between 26.2k and 24.9k. If we then go to the both bullish and bearish scenario and we zoom in just a little bit, I'll repeat basically that again, it doesn't matter if this is the end of a wave 1 or a wave X. The bullish and the bearish scenario currently have the exact same probability, except for when you zoom out to the macro time frame. I mentioned that the wave 4 on the macro of 2020 looks a bit odd compared to this being a wave 4 in a bullish scenario. But on this time frame, this trading setup is exactly the same. Doesn't matter if it's a wave 1 or a wave X. Both in these setups, a potential trading is laddered inside this area, as this is then the potential wave 5 ending taken from the high of 3 to the low of wave 4. You get this area over here, which is the most common wave 5 target. And in both scenarios, we would be looking for the downside. We also, of course, have the support resistance area as well, high time frame range value area low. And then the trade to the downside is then a potential wave 2 in a 1, 2, 3, or we go down for Y, much deeper prices. If we then go to the lower time frame, that's of course where, well, the interesting things happen because it changes all the time. So in this scenario, wave 5 ended over here. We then have a 3 wave in the A, which is an expanded flat, followed by a W, and then we expect an X, and then we expect some sort of a Y or an A, B, C to the upside. So at least a 3 wave to then have an expanded flat B. So you go from an A to a B into a C, basically an expanded flat in A leading to a bigger ABC expanded flat. In this scenario, the most common target for wave B is between the 1.236 and the 1.38, which basically is 29K and 29.6K. Has a couple of confluences around this area, as you can see as well, which is pretty nice. However, yesterday we dipped below the target box over here as well as the daily, and on the 30-minute we closed candles below. For me, the invalidation now is that if price goes below this wick, I actually don't like to see it, because we don't have a lot of support left and one can expect a bit more downside to come if we are going to take that wick. So the other scenario is that this is an A, this is a wave B over here, so the invalidation would be then taking this high once again. It hit the rare wave B target, the 105, quite perfectly actually, before now moving to the downside in then a more impulsive structure, eventually a wave C and like a 1, 2, and now working on a wave 3 to the downside. The other scenario is that wave 5 ended over here with then a ending diagonal. I don't really like the ending diagonal, to be honest, because it looks a bit odd. This can be a 3 wave, yes. This can be a 3 wave, yes, but then we have this one over here, which looks very impulsive and not a 3 wave at all. So because of this wave, actually, it looks a little bit like weird in an ending diagonal scenario. And if this then is a wave 1 and this is a wave 2, and we're looking for 3 to the downside, you know, you have a weird ending looking diagonal, wave 2 going all the way to the 886, which already is a very rare target for the wave 2. It's more common for a wave B actually, where this then is an A, B, and we're now working on C. Yeah, it's not my preferred scenario, but then again, we have a bit of bearish divergences. So if we move to the downside and we're going to take these lows, it can be either a potential A, B, C to the downside, where the most common target box is over here. You can see the prices as well. But we just have a target box just below. And because of that target box just below this scenario, a potential impulsive move that has a little bit of little bit deeper targets might be more interesting. So that is why I have this scenario on my chart as well. And then finally, I had a potential ending diagonal in a bigger fifth, which is definitely not preferred. This wave 4 looks very weird compared to this wave 2. Wave 4 is very long compared to a short wave 2. I don't like it. And also seeing the price action at the moment with not a clear wave 3, clear 3-wave structure over here in the 2. Yeah, not the best. Same actually for this very bullish scenario where wave 2 is in, and then this is a 1, 2, 3, 4, 5 leading diagonal in a 1, 2, 3. Also currently not preferred. That being said, I hope this video was helpful or valuable to you. I'd like to thank you for watching and subscribing, and I will see you at my next video at 1 p.m. Central East European time. Bye bye.